Weird. Okay, can y'all hear me? There's weird noises coming out of my mouth. Y'all hear me? Let me know if you can hear me. What's up? What's up, chat? Can y'all hear me? Y'all really sound like an alien.
Okay, so we plugged it back in. Let me know if it's working better now. Oh, I gotta listen to this. Hold on. Look, I used the good old fashioned unplug it and plug it back in. Now it works. Weird. Yeah, strange. But hey, we're here today, guys. Markets are mostly up. Nvidia's flat, completely flat on the day. Google's down a little bit. My Marvel trade is up, which is good. The Nasdaq is pretty green on the morning. Futures are mixed. Nasdaq ES slightly green, but a little bit better. Dow is let's see what Dow's green as well. Gold is pulling back a little bit. It was at like 36 something yesterday. It's now at 35.98, roughly 3600. Alphabet is up after a favorable antitrust ruling. Apple went up as well. There's still a cautious tone. Today we have the non-farm employment change data dropping at 8:15 Eastern Standard Time. It's a pretty big report. Bring back Donald Duck. I'm sorry, guys. I'm sorry. Yeah, Google is down. They had some news this morning. A U.S. jury in California. This must have been yesterday. So yesterday, a U.S. jury in California says Alphabet must pay $425 million in class action over privacy settings, according to a spokesperson to the plaintiff's lawyer. We'll see what happens, but yeah, that news might be. I mean, they're also up pretty Google's still up pretty substantially from the favorable ruling they received regarding they don't have to sell Chrome, right? So Alphabet's already up pretty big on that news. Nvidia's correcting the last few days. If you take a look at Nvidia's been correcting the last few days. It is starting to fall again this morning in pre-market. You can kind of see some of this red action starting here, but Nvidia's down. And again, today we got the prelim NFP data. Google technically red, or no, I'm sorry, Nvidia's technically red on the day. So, yeah. September rate cut odds are now 98%. 98%. If we take a look at yields this morning. Yields are all the way down under 4.2% right now. Look at this. Again, yields are down to 4.2%. Much lower than they were. So rate cuts are all but guaranteed in September. I mean, today's data, tomorrow's data does have a chance to weigh on these and influence these. All right, so Mark Benioff, the CEO of Salesforce, said he won a significant piece of defense business against Palantir, which had an offering that was very expensive. Again, yields are down. If you look at rate odds as of now, rate odds are currently just under 98%, 97.6%, 2.4% chance of a pause. Not next week, but the week after this is when it's going to be. It's in a little bit less than 2 weeks. Yeah, sorry, I'm gonna open that up now. Yeah, Nvidia dropping. Bitcoin currently sitting at 111,360 for Bitcoin futures. I hope we get max employment for a 100 basis point cut. So Jeff, it seems like you're doing it the opposite way. Like what's going to cause a larger cut is going to be labor and employment weakness, not strength, right? Like you got to think the reason they cut rates is to stimulate a weak economy, not a strong one, right? So if the labor report shows really weak numbers, that's going to mean more justification for larger cuts potentially. I still think they're only going to go at 25, but that's what it is. It's not like really strong employment data is going to mean they're going to cut more, which is the opposite of what's true. Apple is down a little bit now. Look at the NASDAQ fall here. This is Nvidia, I still think, but Microsoft. Meta's up a lot this morning as well. Hey, thank you for the donation, Rusty. Appreciate it, bro. Thank you, sir. Yeah, so Salesforce earnings beat. Stock drops, shows investors are still wary of AI adoption. Lumber prices have been falling as of yesterday, dropping to their lowest prices since last autumn before higher duties on Canadian imports and the threats of tariffs sent them up. Futures have now declined 18 of the past 22 trading sessions. Consumers are worried about slower hiring and rising prices. Beige book points to sluggish economy. Businesses were hesitant to hire because of weaker sales and uncertainties tied to U.S. trade battles. The Federal Reserve said, but tariffs only exacerbated inflation by a moderate or modest amount so far. Yeah, I don't know why Meta's up. Does anybody know why Meta's up this morning? I'm trying to track this, but we will see. Okay, so just to summarize the Beige book that dropped yesterday. Across most of the 12 Fed districts, economic activity was either flat or only modestly growing. Only about 4 districts reported slight growth. The remainder saw little to no change. The rising tariff-related costs combined with weak consumer demand have squeezed both households and businesses, and consumers have pulled back, opting for discounted goods, staycations, and vehicle repairs over new purchases of vehicles. Firms are cautious. Many paused hiring and are slow to refill open roles or are reducing staff from attrition, especially amid uncertainty. Employment conditions remain generally stable, but softening was evident. Hiring remains cautious. Labor market pressures varied by district in some areas, reduced by immigrant labor, further complicating hiring. In terms of prices and inflation, related to tariffs, insurance, utilities, and input costs were noted across most regions in terms of price increases. While some businesses added to consumers, many could not due to weak demand, resulting in margin pressure. So basically, markets are interpreting the Beige book as we're leaning towards the 25 basis point cut on September 17th. From this Beige book, Fed officials are increasingly pivoting focus from fighting inflation to responding to economic slowdown in labor markets, is what the Beige book showed. So I think this might mean, this is probably why rate cut odds went up even more, is because the Beige book didn't just state high inflation, it stated economic slowdown is what it stated. And this means that we're like, unless labor shows really strong, even if it does tomorrow, I don't necessarily think anybody's gonna trust it. And so I think we're probably going to cut in 2 weeks now. Shorting can make money, like Rusty's saying. You just gotta do it right. What's up, Caesar? What's up, Pew? Charlie, Ryan, Axel, Matt, Sig, Ava, Jeff, P, Trevor, Ruben, Robert, Pawn, Ty, Great, Besh, S1, Abed, Handler, Joe Hall, Brad, Hassan, Billy, BT, Trey, Satoshi, TJ, and everybody else. I'm not scrolling up anymore. Chase, what's up, guys? Julie, Sunny, what's up, guys? Cash. All right. Yeah, so we're under 23.5. I'm looking at 23.5. I think it's probably a pretty big psychological level. 23.5. Looks like rate cuts are coming. And again, the first look at the labor report we're gonna get is in about 45 minutes. Remember, this next is in about 45 minutes. It's called the non-farm employment change data from ADP. It drops in 45 minutes. It's relevant. We'll see what happens. Let's do a poll. I realized I didn't do a poll yet. My bad. Yeah, so today we got a whole bunch of stuff, to be honest. We got stuff basically every hour today. We got prelim NFP data called the non-farm employment change, dropping at 8:15 market time in 45 minutes. After that, at 8:30, we have jobless claims, import-export data, and more. And then at 9:45, we have services PMI, and at 10 a.m., we have the larger services PMI, the ISM services. We got a lot of different reports coming out today. Vote on the poll. The poll is now live. Challenger layoffs just came out. So the Challenger layoffs just dropped. They showed up at 85.97K, 85.979 thousand. I'll put the number up on screen. Challenger layoffs are here. They just came out. Again, they showed up for August at 85.89 or 85.98 is what I'm going to round up to. The previous was 62,000. So this shows some weakening in labor market. We also have some of Nvidia news. Nvidia's VC arm is investing in Quantinuum, valuing the company controlled by Honeywell at $10 billion, according to Bloomberg. I'm sure this is going to make Honeywell. It's up a little bit. NFP is tomorrow, the prelim NFP numbers. Usually it comes out 2 days before NFP, but today it's coming out 1 day because it was a shorter Labor Day week. I don't know if it's going to be more widely watched. I think it might be more accurate, but I don't think it's going to be more widely watched. Apple just got upgraded. And now it's down a little bit from it, but Apple got upgraded at Moffitt Nathanson. SIG upgraded at CFRA. Okay, I can't handle this song. After my positions hit take profit, I will flip the market 360. Be aware no shorting or long will serve you. Focus commodity and energy limited stuff be warned. So the big move will be tomorrow. We don't really know when the big move is. Sometimes the big move is right when the data comes out. Sometimes it's right. Sometimes it's the week before. Like, you never really know when it's going to get baked into the market. Apple just got upgraded and it's dropping. So you don't know. You don't ever know when anything's going to happen or if anything's going to react. I see a lot of fear coming out the last couple weeks in terms of bubbles, fear, markets. All right, guys. Meta is at 750s. 750s. So look at Meta push up too. I'm trying to figure out why Meta's up today. I can't figure it out. I think the only thing I can think of is I did see that Zuckerberg is set to meet with the president in some AI pitch is what I'm showing. I don't think that would make Meta go up this much, but it might be. It's the only thing I can think of. I don't see any other meta news. I really don't. Like, I'm looking for the symbol. I don't see any other meta news. So that's the only meta news I could really think of here. I think he's actually meeting with the president's wife, like the first lady is who I think he's actually meeting with. I'm not 100% sure though. I saw it somewhere. All right, so the U.S. job cuts totaled almost 86,000 in August, which is the highest for that month since 2020. Obviously, that's not good for the labor market. These are job cuts. So a higher number is bad, and it showed its highest number for August since 2020. 5 years. I'm surprised it's not making the market. The Challenger job cuts is not usually like a big influence, but that's an interesting data release. U.S. companies announced in August they plan to add 1,494 jobs, the fewest for the month in data going back to 2009. Announced job cuts jumped from a year ago to almost 85 to roughly 86,000 and marked the largest August since 2020. That's a bad number. That's a scary number. Yeah, remember we bought Marvel yesterday. We kind of added to it on a pullback, and now it's kind of green. We're basically flat on this one now, which is good, I guess. We're green on the day total. Look at the NASDAQ reject here. Yeah, that's bad. Again, in other news, right? So remember, today we have ADP non-farm employment. Prelim look at the labor market. Prelim look at jobs. We have jobless claims at 8:30. At 8:15, we get the prelim non-farm numbers called non-farm employment change data, ADP non-farm data. At 8:30, we got jobless claims. We got import-export prices. We have, you know, the trade balance data. We have, yeah. And then we have services PMI and global composite PMI at 9:45. And then we got ISM, not services PMI, basically. ISM services at 10 today. So a lot of different stuff dropping today. So a lot of people commenting on the Challenger job cuts. Andy Challenger says, quote, September is typically when we begin to see large seasonal hiring announcements, which foretell how retailers expect the holiday season to go. Coming off the lowest August on record for hiring plans, it may be a troubling sign. And so, yeah, we're starting to see some economic weakness is what we're starting to see. Again, a question for the chat. Do you guys think we should cut rates still? I mean, I think this proves more we should probably start an easing cycle. I think this proves more. Is anybody still against rate cuts? And if so, I'm not against you. I'm not saying you're wrong. Just let me hear your argument for it. I'm curious. What's happening in your town regarding the economy, job market, restaurants, anecdotal things? I don't know. I don't really. None of my friends are. None of my friends are really struggling to find work here. Like the friends I have here, none of them are really struggling to job. None of them have been getting laid off. If anything, most of them have been working more. But again, sometimes using like we got to look at everybody and everything, and sometimes looking at just your circle is not the most accurate thing, you know. Stimulate housing, yeah. I think that's probably true. I think we should put a focus on this easing cycle and into housing, in terms of. Maybe I'm biased because I just bought a rental property, you know, in the last year. And so, sure, I'm like, yeah, stimulate the housing market. I'm for it, you know, do it. But yeah, I mean, we could end quantitative tightening on MBSs would help the housing market. You know, they've already reduced the Treasury QT by 80% a couple months ago. And so, you know, we could keep it there if you want for balance, but reduce MBSs by 80% at least, I think would probably be a good move. Like, I think if because they already reduced MBS, or they already reduced Treasury QT, like the sell-off of their treasuries in their balance sheet by 80% a couple months ago, but they kept the same speed for MBSs. They didn't reduce it by 80%, they kept it the same. And so they basically didn't reduce mortgage-backed securities, the offloading of their balance sheet in regards to mortgage-backed securities. They didn't reduce that at all a few months ago when they reduced it for treasuries, right? And if you want interest rates to go down in mortgages, that's one of the things you can do, or, you know, And so reducing that, even if they don't stop the reduction of their balance sheet, even if they just reduce it like they did with treasuries, I think that would be good for those markets. Now, it might make home prices go up, and so you'll probably be paying more for house prices. And I do think there's an argument on the other end of that, which says house prices are up too much. You know, people are really going to be unhappy if nobody can afford a freaking house because they're so freaking expensive, even if they can get easier loans. And so I think there's arguments on both sides, and I don't think the answer is super easy. But just for my own selfish reasons, I'm okay with it, you know. What will the Fed do when AI replaces? Yeah, I mean, they'll probably stimulate the economy. Realistically, whenever that happens. People are talking about the Japanese bond market. They said as of writing this, the 30-year yield sits around 3.25%, just off the all-time high. So a hawkish Fed there, maybe. The thing about cutting rates is it's complicated. The market is waiting on this. I agree with you that it shouldn't be done. I'm not even saying it shouldn't be done. I think it's okay to do it with balance and ease. Pun intended, I guess. Like, I think if you do a small cut, it's fine. And if you... And I think if we're starting to see big weakness in the labor market, it's kind of something that we might need to see, you know? You know, STRC pays 10% annualized. Somebody told me this at Jiu-Jitsu yesterday. It's so freaking new though, bro. This thing's only been out 1, 2, 3, 4, 5, 6 weeks. And it's been volatile these 6 weeks too. Oof. Isn't there another one? Yeah, but this thing's pay again. The MicroStrategy STRC dividend is 10% annualized, so it basically pays you a little bit less than 1% a month. It pays monthly. Excuse me. Like, I want to do it, but here's the problem. If it moves up and down 10%, if it moves down 10% and then it pays me 1% in a month, you know, what's the benefit of that? Is the problem. Somebody sell me on investing in the STRC for the 10% annualized dividend. How much is in MSTW? Yeah, but look at MSTW here, dude. Look at this. That's not a good trend. Like, I was under the assumption that this stayed sideways, you know? Like, this thing has dropped, what, like 35, 38, 40% or whatever this percentage is? Let me see what this percentage is. I'm trying to do the math in my head, but this thing has dropped from 51 down to 34, 35. Yeah, that's 31% drop in 1, 2, 3, 4, 5, 6, 7 weeks. Like, how much does this thing pay out? If the Supreme Court blocks tariffs, we are going to downtown. Maybe. Maybe we're going uptown. I mean, I don't know. All right, look at this bounce right here at 23.5. So we're back over the 200 exponential. A 50 basis point cut is paying 20 to 1 odds. Yeah, because it's super freaking unlikely. There's not even the option. Like, yields haven't even priced that in at all. Like, in order to get a 50 basis point cut, we'd have to see really weak prelim numbers today. Really weak labor report tomorrow. Next week, we'd have to see a really big benchmark revision to the payroll numbers that's supposed to drop on the 9th. And then we're supposed to see... And then we would need to see like low inflation on both CPI and PPI to get close to a 50 basis point cut. And so, all right, look at this drop in the NASDAQ here. All right, a Eurozone poll just came out that said that they're going to keep rates steady on September 11th. 66 out of 69 economists think so. What's dropping the market right now? Anybody know? I think it's Nvidia. Look at Nvidia fall. NASDAQ just dumped here, though. Look at the NASDAQ fall here. Wow. Apple down. Not really Microsoft, Meta. Gold pushing up. MSTY. I'm looking at some of these yielding ETFs here, but like the problem is what I want to see for these is I want to see sideways action, and instead I see this. Like, look at the long-term chart here. Like, percentage-wise, this thing's dropping huge percentages. Like, regardless how much they pay me in a dividend, you know, they're dropping more percentage than they're paying me. Like, this thing's down, what? Like, 40%, 30%, and since May? So if they're paying me 10% annualized, which is less than 1% a month, why would I hold something that's dropped 35%? It's nonsensical. It makes no sense. I'm going to lose net, what? I'm going to lose way more than I'd make here holding this thing. Just in terms of its history. You know? No, it's STRC is the 10-year or the 10% annualized yield one, but it's down big too over the last 3 months, 2 months. Somebody sell me on this because I don't get it. Like, here's STRC. Somebody told me about this one, and this one's a little bit better, right? This one's actually up since in the last 2 weeks. But when I look at like the volatility, this one's actually green. So STRC looks a little bit better. The problem is that I'm worried it would drop overnight. All right, so look, we're bouncing off of 490 on the NASDAQ here. Okay, Christmas music. Where's this even coming from? I don't know. Yeah, STRC isn't down that much. It's a little bit better. I'm just worried it's gonna drop big. Like, there's another one. It was STR something. Hold on. F. STRF looks better. Okay, MSTY pays 10% a month. Okay, gotcha. That makes a little bit more sense. How much does STRF pay? All right, NASDAQ keeps falling here. I don't really see any news to cause this, man. I think people are getting baked into... I think people are getting baked into the labor report, maybe? NASDAQ's turning here, though. Look at this. STRF. NASDAQ's still falling here. Wow. It's got to be Nvidia, right? I mean, it has to be. Nvidia's the only thing that... I mean, no, it's not Nvidia. What is... Okay, so there's a stock driving this move. Let's figure it out. It's not Nvidia. It's not Apple. Not Meta. Not Microsoft. This is AMD, guys. This is AMD. Look at AMD. What just happened here? AMD about 1, 2, 3, 4, 5, 6, 7 minutes ago. Which 1, 2, 3, 4, 5, 6, 7. Okay, this is AMD. For some reason, I don't think AMD is really gonna move things like this, but it's the only thing that kind of makes sense. Other tech are kind of following it as well. Not really any driver of this, though. I don't really see any news on the wires that are coming out that would justify this drop here. There's probably somebody that has some insider information. Nvidia is actually kind of moving up right now, if we take a look at it. Nvidia's up to 171s. So... Alright, we're at 159.90s. Again, no real news coming out on the wire either. Nvidia's actually fighting its way back up. Looking at our poll number, 61%. 60% out of 40% think bullish versus bearish today. AMD still falling, Nvidia rip it up, gold pulling back some here. Yeah, Amazon up decently. Netflix is flat. Yeah, chat, listen, we got like 20 minutes. Less than 20 minutes here. NASDAQ starting to bounce back some. Prelim NFP data comes out. AMD Seaport downgrades to neutral from a buy rating is what happened. No price target. Seaport Research cut AMD to neutral from a buy rating, citing supply chain checks showing slower AI accelerator growth. The firm lowered estimates and warned the slowdown could make meeting high expectations difficult this year specifically. And so that's the news driving AMD down. That's probably what's driving down the market and driving down microchips in general, but Nvidia hasn't really weighed on it. "17 minutes, chat." Will the market go up or down in September? Say up or down in chat right now. Let me know. We've kind of gone back and forth this year. So again, Powell's late August remarks at Jackson Hole opened the door to rate cuts. Now we're at almost 98%. Yields are down significantly today. It's looking like we're going to cut rates in 2 weeks in September. But we'll see if we actually do or not. Looking at everybody said up, neutral, opportunity in September, stocks down, crypto down, commodities, energy heating up, sideways, Bitcoin has to go up. 20 to 1 odds, 50 basis point cut. I think that's terrible odds. Like, in order to get 50 basis point cut, again, like I said, we'd have to get a really weak labor report today and tomorrow. We'd have to get really low inflation next week. We'd also have to get a bad revision, I think, in benchmark numbers. So if we get bad data today, tomorrow, and next week in terms of labor data and low inflation data, then we maybe will cut 50, but I think it's a pretty far out thing. Maybe it happens. It could happen. You need the perfect storm, though. And I don't know if 20 to 1 odds is, you know. People always like to make these big bets on these big, you know, highly unlikely things that pay big money. I find it better to just go with the most probable outcome, especially in rate decisions. Yeah, big seller in AMD. AMD got downgraded. Right, so somebody knew about the downgrade coming early and probably jumped in. Yeah, I mean, we could have a weak labor report, right? But having 3 different weak labor reports and low inflation is a different thing. All right, there's 8 a.m. NASDAQ's fighting its way back up. Like, you want to look at what the chances are right now. Yields are going to influence this, right? And as of now, there's not even the option for a 50 basis point cut here. 50 basis point cut would be on this end right here, right? And it would be 375, 400 right here is what it would be. Top 3 drawers in the world right now. That would be a 50 basis point cut. And it's not even an option right now. Maybe after today and tomorrow it changes. We'll see. It's possible. Even if it does change, I think it's going to be a pretty low thing. But you never know what the Fed's going to do. Maybe they do something. I might take a little short here. I can hurry up. Alright. We entered 1. We entered 2. Maybe up to 4 here. All right, less than 15 minutes now, guys. We got about 12 minutes left. All right, so we're green here. The problem is it looks like 23.5 is actually holding it up. I'm gonna short a little bit more, and I'm probably gonna jump out of this immediately with this big pop. Even if we turn the other way, less than $20 loss, I'll be fine. Honeywell announces 600 million capital raise from Quantinuum at 10 billion pre-money equity valuation to advance quantum computing at scale. Yeah, this level, maybe I should have let it test. It was just too risky. That's a big candle. I'll probably wait for the employment data to come out to trade. We've had some pretty good days in markets where we've made some money. Yeah. $50 basis points. Besant does? Yeah, I mean, I want $1 billion. Doesn't mean we're going to get it. Maybe we do. Again, I'm not, you guys know me. I'm not really absolute in anything. I should have held this short. It would have worked, but this push up was too strong looking ahead of this report, so. Look what happened after Fed cut last year. Slow down. Or down. Yeah, I mean, maybe. When's the next significant inflation data? Next week we have CPI and PPI data. The first PPI since the last really bad one. Okay, maybe exiting wasn't the wrong thing. I get it. My worry for getting out here was that 23.5 was going to hold. Big psychological level. Again, T-Mobile is increasing and accelerating long-term synergy expansion following close close of U.S. Cellular, and provides business update. Expects $1.2 billion in annual synergies from deal and integration expected in 2 years. For quarter three, sees U.S. Cellular acquisition to add core adjusted EBITDA of about $125 million. Market's pushing up though. Apple was going to raise iPhone prices for the first time in 7 years, according to MS. Morgan Stanley expects Apple to modestly increase iPhone 17 prices at its September 9th event, the first hike since 2017. The iPhone 17 Air will debut with a thinner design, C1 modem, and a $100 premium over the iPhone. Today a new all-time high? I don't think so. We're nowhere near that on the NASDAQ. S&P, still got a long ways to go. I mean, the SPY could do it. It's just a big move. I don't think the data today is going to make it influence that much. Maybe. We got jobless claims at 8:30 as well. So remember, in 25 minutes, we got jobless claims. In 10 minutes, we have the prelim NFP data. Yeah, Apple's still down on the day, but ugh, excuse me. Sip my coffee a little bit too fast there. NFP data is non-farm payrolls. All right, so NASDAQ still pushing up. Again, we got less than 10 minutes. We really have about 7 minutes left. And so ADP data, which is automatic data processing, is what ADP stands for, in partnership with Stanford Digital Economy Lab, releases monthly, usually 2 days before the NFP, but this week it's the Labor Day week, so we have this data 24 hours before. So what ADP non-farm employment change measures, it estimates private sector payroll growth based on ADP's payroll processing data, which is about 25 million workers. It doesn't include government jobs. It's seen as a preview or directional hint, kind of prelim for the upcoming NFP data, but not always accurate. Sometimes it varies slightly. Non-farm payrolls measures private sector payrolls, government jobs, and farm jobs are excluded. So NFP data is the single most important economic data release each month for the most part, aside from maybe like Fed meetings and other stuff. It drives big moves in stocks, bonds, and currencies. So ADP is like private early job estimate, sneak peek into what we might get tomorrow. It has to do with volatility, why they exclude farmers, like if it influences data too much. Well, this is like a preview of tomorrow, is what this is. No, today's data is noticeably less important versus tomorrow. Tomorrow's data is way more important. Tomorrow's, you could argue the payroll report every week or every month on like tomorrow's payroll report. You could argue that's the biggest single economic report each month. And I'd say in terms of reaction and influence, it can be. I would say like in terms of influence, CPI, PPI have a big influence. PCE can move things too, but I would say payrolls are stronger than PCE in terms of influence. CPI, PPI may be the only other one that could go head to head with the influence that the labor report gives you every month, outside of maybe Jerome Powell and the Fed. All right, so we're starting to head up. Actually, we're starting to pull back a little bit, but we have moved up. We have now about 6 minutes, about 5 minutes left, really. I don't know if the annual labor revision is tomorrow. I heard it was on the 9th, but it might be tomorrow. I heard it's next Tuesday. I'm pretty sure the benchmark revision is on the 9th. Yeah, September 9th at 10 a.m. Eastern time. It incorporates payroll data from the quarterly census of employment and wages based on state level tax records. So yeah. This month's revisions could significantly lower previously reported job growth. They think between 500 and 1 million fewer jobs across early 24 to early 25. All right, guys, here we go. We got 4 minutes left. 4 minutes left. Hit the live button next to the play button. Hit the notification bell. We appreciate it. And put it in 2x speed if you want, because that way you'll be on time with the data release. Sometimes I'll report the data and then somebody that's really delayed on the stream's like, hey, it's 8:30's past. And it's like, yeah, you're delayed on the stream. Hit the live button. Put it in 2x speed. And I should catch up as long as you hit the live button and then do it. All right, here we go. All right, guys. Let's get ready. Again, it's expected at what, 73,000 for non-farm employment change data. 73K is what's it expected at. Previous was 104,000, right? Yeah. Three minutes. Nasdaq's pushing. Almost to 525s right now. Yeah, Nasdaq's pushing. Yeah, Bitcoin down a little bit this morning, down to 111,450 in Bitcoin futures. Yeah, my timer's always a little bit early. You just gotta. I see 170 likes, but I appreciate the push for it. Global, thank you, sir. Chance for 0.5 basis or chances for 50 basis point cut if NFP sucks. We'd have to get a lot of other parallel data. We'd have to show like low inflation as well as like a big revision in the benchmark revision on Tuesday, as well as like low CPI and PPI, and then maybe chances for a 50 basis point cut by raise. Or we'd have to show really, really weak numbers tomorrow, like really, really, really weak. And so, yeah, it depends with that type of stuff. Also, guys, we're gonna report this data. Don't go anywhere, because after this data, we get jobless claims 15 minutes later. We get jobless claims, we get the trade balance data, and more just 15 minutes later. So stick around. We got a lot of data at 8:30, 8:15, 10 a.m., 9:45 a.m. today. It's a busy day for stuff. Yeah, the timer, we got the prelim NFP data called the non-farm employment change data dropping in about 1 minute here. 1 minute. This timer's early. Again, we got about 1 minute left. All right, let's get ready. It's expected at 73,000. It drops in about 40 seconds. We'll see if it moves some stuff. I'll put the SPY up here. We got gold on the right side. See if it influences yields as well. We'll take a look at that. All right, guys, we got about 20 seconds. Again, hit the live button. Make sure you're caught up on stream here. All right, guys, about 10 seconds. All right, here we go. It's getting close. Really about 5 seconds left. 3, 2, 1. And here's the report, guys. Here's the report. 54,000. 54,000 is what it showed up as. Showed up at 54,000 versus 73,000 expected. Again, 54K versus 73K as well. Again, showed up much weaker than expected. 54K versus 73K expected. Previous of 104K. So here's a prelim weak number here. 54,000. It was better than we've seen in the past in some reports, but not good. Lower than expected. Noticeably lower than expected. Again, 54 versus 74, 67 expected. Lower than most of the estimates here. And the NASDAQ is reacting negatively to this report. Again, 54,000 versus 65, 74. I'm showing a couple different reports. I'll put this data up on screen. And again, as we do, we cover it before everybody else. You're welcome. 54 is what the data showed. All right, we got it scrolling at the bottom of the screen now. NASDAQ did react negatively. 54,000 here. Remember, we got jobless claims unemployment. Stick around, because we do have jobless claims unemployment going live in 13 minutes. Hey guys, listen, all 1,600 here. We need what? How many subscribers do we need? We need 22 subscribers to break 165,000. I'm not going to say this. Subscribe. Do it now. Do it or I'll hate you forever. Do it now. You know, we got 13 minutes. I'm just joking, kind of. But yeah, non-farm employment data was not good. It was not good. Let's look deeper into it though. Okay, let's look a little bit deeper into this. All right, so here's the August report. Again, it showed 54,000. Leisure and hospitality and construction performed well despite a broader month-over-month slowdown in hiring. The year started with strong job growth, but that momentum has been whipsawed by uncertainty. A variety of things could explain the hiring slowdown, including labor, skittish consumers, and AI disruptions. Change by estimated size: 10,000 for small, like 1 to 19 employee businesses, 2,000 only for 20 to 49 employees, 18,000 for 50 to 250, 250 to 5, 7,000, 500 plus employees, 18,000. Manufacturing decreased, trade, transportation, and utilities decreased, financial activities decreased, education and health services decreased. So that was the report. And again, the market did not like this. It did not like this report. Hey, thank you, Mark, for becoming a member, bro. I appreciate it. Again, 8:30, guys. Jobless claims, unemployment, and more. Yeah, we got 8:30. Trading data. Yeah, again, jobless claims comes out in 10 minutes, guys. NASDAQ is falling down on this weaker report. Ugh. Give me your last minute predictions for jobless claims here, chat. I don't know what we're going to get, but that data drops at 8:30. We also get the trades balance data. Look at the market fall here. All right, NASDAQ falling here. Let's look at 490. I might buy this little dip here. Tried. We'll add to it if we get a retracement back up, but it's looking risky. Actually, we're flat. We're green. Now we're flat again. All right, I gotta cut this. We suck again. I'm sorry for the Christmas music. I don't know why they keep adding this in here. Hold on. There we go. The large U.S. firms are reportedly among those weighing proposals of selling refund rights as potential way to cushion tariff losses, according to New York Times. Again, we got jobless claims in less than 10 minutes, 9 minutes. We'll see what we get, but... All right, so we just took a bunch of profit in another account that we have, which is good, I guess. So we actually bought this dip in a different account. I'm gonna switch out of the other one. Hey, thank you for becoming a member, Mark. We are looking for another fall in the dollar index. Yeah, so that was the Challenger job cuts, Paul. So the Challenger job cuts also showed the worst August numbers since 2020 for the Challenger job cuts. It wasn't good. If we take a look at yields right now, which I think is one of the things to watch. We take a look at yields as well as, wait, where's, no, that's not yields. Here's yields. Rate odds are still pretty high. Yield should be lower on this report because it shows weaker job numbers, but the yields market isn't really reacting. Maybe it's waiting for jobless claims, but yields are still under 4.2%, which shows a lower interest rate sentiment here. Yeah, small businesses are the ones in terms of the ADP numbers. They had the worst numbers here. Jobless claims going to be so bad the Fed going to be cutting 50. Again, it's not the jobless claims report that matters. It's tomorrow's labor report that matters, I think, personally. You like the big question is, like, the question you have to ask yourself is, are we headed towards a recession based off of these labor reports that we're getting, right? Is GDP going to be affected? Is the labor market going to noticeably be affected enough to where we're heading towards a recession? That's the question. And that's what's going to make the Fed react if we get really weak signs. And again, I think there's an argument for it. Maybe we do get 50 basis point cut. Listen, if we get bad numbers today, bad numbers tomorrow, bad numbers next week, and low inflation data, or even just as expected inflation data, maybe the odds of a 50 basis point cut will go up substantially. It's certainly true. We're not in a recession. All right, so we're still down under 490. Listen, we're not in a recession. We're not in a depression either. A recession is 2 negative GDP prints. You know? And we don't have that. A recession is 2 consecutive negative GDP prints, just to clarify. And we don't have that. Not yet. People like to look at things that are weak. A lot of people are unhappy just because prices are high. But that's actually the opposite sign. Tesla shares are up. Data shows company's UK car sales rise in August. GM is going to cut output at EV plant in Spring Hill, sources say. Apple was upgraded to neutral from sell. And, yeah. All right, I love you. Have a good day. All right, guys, NASDAQ is testing that 490 level, but we are breaking down here. We got less than 5 minutes until jobless claims unemployment filings come out. Again, jobless claims unemployment filings are expected. Hey, dude. Love you, buddy. Have a good day, man. All right, jobless claims unemployment filings expected. Jobless claims unemployment expected at 230,000, which is a slight uptick. $230K. Previous of $229K. Yeah, but you got to look at what it means to be in a recession, which is 2 consecutive losing GDP prints. you know? Right, I'm saying we're not in a recession based on the official definition of a recession. Again, look, I'm not saying things are good. People like to sensationalize it, right? So if they consider things not good, boom, we're in a recession, according to them. And again, that's not the case. Sometimes things aren't good because prices are up too much, which is certainly, at least some people would agree with that right now. And again, that doesn't mean a recession, right? But the weak labor report can be a signal of a looming recession. And so it doesn't mean we're in one now. It means we might be headed towards one if the labor data continues to show massive weakness. We got to look at unemployment as well, though. Tomorrow, we'll see what unemployment is. I think it's expected to... unemployment tomorrow is expected to show up a little bit higher at 4.3% versus 4.2% last time. So, yeah. We'll see. Again, jobless claims releasing in about 2 minutes. 230K expected. Hit the live button next to the play button. Hit the subscribe button as well. We appreciate it. Yeah, the quarters are lagging for the GDP data, right? So we get it a quarter later is when we get the GDP data, right? So this last GDP report was I think it was the first revision of the second quarter. We're in the third quarter right now. So, all right, guys, a minute and a half. Hit the live button next to the play button. Put it in 2x speed. I appreciate it. Jobless claims. The reason this is relevant is because this is a more real-time look at the labor market. This is a more real-time look at unemployment. You know, it's a week-to-week filing report. So the jobless claims report is a real-time look at where unemployment claims are at. We got about a minute left. Again, put it in 2x speed if you always want to be up to date on the stream so that you can actually catch these releases. A little trick. Put it in 2x speed. Hit the live button. Dude, they hit me with this Christmas music. All right. Again, we're expected at 230 right now. 230,000 is what we're expected at. Import-export data coming out. Trade balance data expected at negative 77.7. It's a much more negative number, which means we're importing much more than we're exporting relative to last time. The ratio is a negative 77 billion more imports than exports. But again, we got 30 seconds, chat. 30 seconds. I guess this is Christmas music too. I didn't even know. All right, guys, 20 seconds. Here we go. 10 seconds. 5, 4, 3, 2, 1. And here's the report. Okay, there's the report. Trade balance data showed negative 78.3 billion. Negative 78.3 billion for the trade balance data. NASDAQ's actually pushing up a lot on this report. Again, trade balance data showed negative 78.3 billion here. Jobless claims 237, much higher than expected. 237 jobless claims versus 230 expected here. Again, 237. Again, 230K is what was expected. Previous of 229K, I think, right? That's what it was. Yeah. $237 versus expected 230K. Previous of 229K. The NASDAQ originally reacted much more positively to this, and then it retraced quick. I'm gonna get a much weaker labor report again. So we got 2 weak labor reports today. One was the ADP data showed much lower than expected. Jobless claims showed much higher than expected. This is how many people are filing for unemployment. And so that ain't good as well, chat. That's high. Again, all signs point to weak labor is what this is. I'm gonna short the market right now. It's a little risky right now. We could retrace some of this big candle wick we got. But yeah, there we go. That's what I wanted. I'm gonna cover down here if I can get filled. There we go. You'll love to see it. Let's see if we keep trending down. Actually, you know what? I'm gonna cover this. All right, we're out. All right, we're net green on the day. That's good. We just got a big red candle here. But again, I'll put this number up. Jobless claims, 237 versus 230. Continuing claims at 1.94, which are actually a little bit lower than expected. But new claims, higher than expected here. All right, we'll put this up on screen now too. Weaker jobless claims, meaning higher unemployment than expected. You can see the 2-week labor report updates on the bottom of the screen scrolling here. And again, we also have ISM services later. Yes. A lot more people filing for unemployment week to week than expected by about, what, 7,000? Again, I don't think this data has the chance to sway the odds of a rate cut that much here. Let's take a look at yields, right? You want to see where rates are going? Look at yields. Yields decreased a little bit on this. Actually, yields are up slightly from this. It's not the biggest move here. NASDAQ's falling down here. And again, the trade balance data was basically flat. Non-farm productivity revised 3.3 versus 2.7%. That's relevant. But yields are really unchanged here. So if we take a look at like rates, still the same. Haven't really moved much. Again, I don't know if this report's going to move it. I think tomorrow's report might though. Thank you guys for helping me hit 165,000. We did break that. Again, do it now. Subscribe. We cover all this stuff as soon as it happens. Every single time there's a big economic release, we're live. And so I expect all of you to subscribe. If you don't, I'm judging you for sure. Do it now. We also have ISM services later. We got one at 9:45, which is just regular services in S&P Global Manufacturer. Yeah, I think it's S&P PMI. 9:45, and then at 10 a.m. we got the Institute of Supply Management ISM services. That might move things too. But at the very least, we got some volatility. Jobless claims are important for rate cuts, 100%. But it's a week-to-week report, and so you have to understand the influence of a week-to-week report is not going to be as significant as a big monthly report like the labor report that we get tomorrow, right? Like that's the thing you have to understand is that, like, yes, jobless claims are more real time look at labor. It's just it's a week-to-week report, so we get a new one every Thursday, and so because of that, it might have a little bit less sway, but it's still very relevant. Yeah, I saw that. Big Macs are like expensive right now. My dad never let me buy Big Macs anyway. I always wanted a Big Mac, but he would make me stick 2 double cheeseburgers together. And he would say, there's no difference, eat it. And I would be like, all right, you know. That's me as a kid, that's what happened. Yeah. Jobless claims are sprinkles on the cake. Yeah, that's basically right. All right, so we've broken down a little bit on this report. The yields haven't really moved. They're unchanged. I know, I can't really get mad at him. You know. My wife's anti-McDonald's. I haven't eaten McDonald's in years. I really haven't. All right, guys, so we're moving down here. We're at 475. McDonald's breakfast it was good. That's the only thing I miss in McDonald's. I don't really miss the burgers. I just buy not better burgers. Like I'll go to Five Guys and eat those. But I miss the breakfast. I miss McGriddles. I love McGriddles. They were good. Yeah, so Bitcoin, again, reacting negatively to this report with everything else. I think it's kind of it's the opposite reaction most people expect. Look at us hold at 475. That's why I bought 490. I was hoping we bounce, but it's like we bounced at this level at 475 as well. You know, if the Bitcoin peeps, they want like stimulus, This report means higher chance of stimulus, you know? But Bitcoin's just volatile, man. It's been volatile the last few days. Gold is down on this report, which is interesting as well. Yeah, but I got the money to pay for Five Guys. I don't really care how much it is. Yeah, but we don't want QE because we're in a recession, bro. If you were in a recession, wouldn't you want QE? Right? Like 2020 happened. QE, guys, just to put this into perspective for everybody at home, quantitative easing is a more desperate form of economic stimulus than just straight up cutting rates, right? It'll bring rates down faster too. But there's consequences for it. It causes inflation, is what it does. It's money printing, right? They create online bank reserves. They use those online bank reserves to buy up a bunch of bonds and other financial assets, expanding their balance sheet, injecting liquidity, but ultimately posing greater risks to inflation is what QE is. They usually do this in really desperate periods of time. They don't do this very often. They did it in 2008. They did it in 2020 because of all the craziness that went on in 2020, supply chain and all that stuff. But again, by 2022, we had high inflation, 9% CPI. And so then they have to basically do the opposite, which is quantitative tightening, which is the unloading of their balance sheet, which they're still doing now. Again, I talked about this before. They reduced it by 80% in terms of treasuries, but they're still fully going with their MBS QT that they've been doing here. And a lot of people are arguing, hey, we should try to bring mortgage rates down. Number one, that's going to raise house prices, most likely, at least. But yeah, if you want to bring MBS, if you want to bring mortgage rates down, you can reduce the QT we're doing on mortgage-backed securities. That would probably help. Might make house prices go up, but Whataburger, bro, get out of here, dude. I mean, listen, I'm in Texas right now. Whataburger's just not, I mean, you know what's good at Whataburger is the honey barbecue chicken sandwich. That's good. I like that. Their burgers are kind of honestly, it's been a while since I've had one. My dad was frugal, but it was smart. In hindsight, it was the smart way to be, you know? I didn't like it as a kid, though, but, you know. All right, 20 minutes until the top of the hour at 9 a.m. Also, guys, if you want to help support the channel, check out TopStep. Beautiful way to help support the channel. No PDT rule in futures. You can get around the PDT rule. They're a sponsor of mine. I'm biased because I get paid by them. Understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. Understand all this stuff, guys. I can't guarantee anything. Remember, I might be terrible and have no idea what I'm talking about. Don't copy me. I don't even claim to be a good trader. But that's why TopStep's important, because you can limit your risk. $50 a month for the base one. If you pass it, you get a 50K funded account, 90% split. They pay out millions, fund thousands. You get to keep your first 10K prior to that split kicking in anyway, so it's very similar to funding your own account. And if you fail, you lose $50 that you pay for it. It's not the end of the world. It's the best of both worlds. It's limited risk, similar reward to funding your own account. And yesterday, they recently debuted their back to funded feature, which I think is really nice, which means that basically, if you lose your Express funded account before taking a payout, you can reactivate it up to 2 times. It means 2 more shots to get funded. The 50K is $4.99 to reactivate. The 100K is $5.99. And so it's available to XFAs that meet the following criteria. The XFA was originally earned through the funding or through the combine, was closed due to a rule violation, was lost on or after yesterday, and is on TopStep X. So once you take a payout, you can't really do back to funded. But as long as you lose your XFA before your first payout, within 7 days, you can decide whether you want to go back. And I think that's a really nice rule, honestly. Again, if you want to check out Top Step, beautiful way to help support the channel. They are a sponsor of mine. I am biased. I get paid by them. But this is incredibly useful. Incredibly useful. I mean, look at this. I'm sorry for the Christmas bells, bro. I literally can't find a song without them today. Look at this. The fact that you can reactivate your funded accounts is nice. How many times have I snowballed a loss into a big losing day and lost my account? Now I can reactivate it if I want. That's really useful. I'll put the link up. Check it out. Here's the link. I'll pin it to the top of the chat as well. Why are markets going down even after the data confirms a rate cut? Well, you got to understand, nobody knows which way markets are going. Nobody knows. But what this... Oh my gosh, there's Christmas bells everywhere. It's got to stop, dude. Hold on. Let me scroll way down here. All right, there we go. You don't think Jerome Powell is going to cut rates after all this weak labor data? I think he will. Yeah, it's buy the rumor, sell the news is why, you know. As well as, like, this move down is not the biggest move. Like, it's something, but remember, the data came out, like, all the data releases, one of them came out here. We did get a downward push. Another one came out here. We did get a downward push, but this isn't the biggest move either. It's not like we can't rebound from this drop. It's not like that's not possible. We could certainly rebound back up, but this is pretty small things so far. But again, we got one really weak ADP data release, 54K versus 73, 75. Some people had it at 65. Either way, we were lower than expected. Jobless claims showed more unemployment claims week to week than expected as well. I think it's pretty probable that we're going to cut rates in September now. And I think yields are probably going to react in a similar fashion here. Although they're not really moving up much or up or down. But yeah, yields are going to react pretty similarly here. And they did react similarly. So look. Here's 830. Yields are down slightly. They're now at 1.19%, which shows, again, lower interest rate sentiment, higher probability of a rate cut. Not much, but something. Tomorrow's report is probably going to be more significant. Rate cut's already priced in. Yeah. Also, give me a follow at Beginner Trades on X. At Beginner Trades, BEGINNERTRADES. We cover all this stuff live. And so, if you don't have time to tune in, you can just watch us there at Beginner Trades. We appreciate it. Yeah, it could be a preview for tomorrow. Tomorrow we get the bigger report, the non-farm payroll unemployment labor report. Labor report is expected to show unemployment rising to 4.3% versus 4.2% last time. It's also expected to show a 75,000 non-farm payroll print. It's expected to show 75,000 non-farm payrolls. Private payrolls expected at 75K. We'll get a look at the U6 unemployment rate expected at, last time was 7.9%. And so tomorrow's report's big. And then again, early next week, we're going to get a benchmark revision to this data. But the NASDAQ is falling down here on this report. I mean, a 50 basis point cut is possible, but even with this latest update, it's not very probable. Like, if anything, you can see rate cut odds actually decreased a little bit. They were at 97.6, they were at 97.4. Basically, it's negligible, but still. Right now, 50 basis point cut isn't on the table yet. Everybody's waiting for the payroll report tomorrow, which is the big report, right? Like, that's the report that's going to potentially move stuff. Okay, so Treasury Department has added digital content creators to the list of occupations eligible for the no tax on tips deduction. So tip me, guys, I guess. Do it now. I'm gonna start getting like a cup out. Like a cup, you know. People can put quarters in it. No tax. I don't know. Yeah, do donations count? Jerome Powell has you. God bless the money. Yeah. I don't know if we're going to print money. I don't think we should do QE. Again, I know crypto people are pushing for QE. I don't think we should do that at all. You know, it's going to make inflation worse. We've already had inflation problems over the last 5 years. Now, we could end QT for balance. We could cut rates small. But I don't think we need to do QE right now. We don't have the weakness that we need to justify. Listen, we get a couple negative quarters back to back. We enter a recession. Whatever. I'm not going to be happy about it. But in that situation, we might have to, you know, print a little bit. Outside of that, though, I don't really want to do QE. I don't think it's necessary. And I don't really understand the people pushing for it. Like, I've seen a lot of push for QE. Why? If you think we should do QE, explain yourself. Yeah, Texas Instruments did have some news. Texas Instruments reports strong aging orders from January to April, particular strength in April due to Liberation Day dynamics. The firm noticed that slow demand post-April failed to show sequential growth as typical, citing potential order pull-ups. Is what it was. We need QE so crypto will fly to the moon. Yeah, but if crypto flies to the moon because of QE, but prices go up for everybody 2 to 3%, is it really that beneficial? I don't think so. I think it's detrimental in that situation. Yeah. All right, guys. Nasdaq bouncing back. Bitcoin bros are hungry. I neither want nor don't want QE. I want a secret. Yeah, okay. You speak as if crypto bros have a moral conscience. I get it. Quantitative easing is a form of money printing in which the Federal Reserve creates basically online money, and then they use that online money to buy up bonds and other financial assets like MBSs. It injects liquidity into those markets, ultimately helps bring interest rates down faster. Is a less restrictive, dovish thing, and they usually only do it in dire situations like 2020 and 2008. It's money printing, and it causes inflation to spike, right? Like, we could take a look at the history of this. I do this usually at least every couple weeks. All right, so let's take a look at a CPI inflation graph here, right? And what you'll notice is that once prices go up, they almost never literally go down. The only time prices have actually gone down and stayed there for a little while was basically in the middle of the 2008 financial crisis, right? And they didn't stay there for very long. They ended up going back up. And so when we say inflation is going down, what we really mean is it's slowing down, you know? But just to give you kind of some history here, you can see 2020 right here, right? And originally CPI inflation went down because we had economic weakness. We had so much economic weakness from 2020. The Fed stepped in and did quantitative easing during 2020. And you can kind of see this is inflation. By 2022, inflation had spiked up to almost 10%, right? Almost 10% spike to inflation by 2022. And so then the Fed goes the other way. They go hawkish, they go restrictive, they do quantitative tightening. But again, prices don't go down. All they do is slow down. And so once prices go up, we're basically stuck with them at these higher prices. And that's why a lot of people are still unhappy modern age, is because in the last 5 years, prices have increased substantially in a lot of sectors. And they're not really going to go back down. And people are, you just got to get used to them. And you can hope for maybe a recession for prices to literally go down. Or we could have a couple years of stability, which is what a lot of people, I think, want right now. And so, yeah. So the risk of doing QE is this right here. Now, just to be fair with this, right? The reason we went up here was not only because of quantitative easing. The reason we went up here, you know, think about it like this. We had lockdowns. We had stimulus checks getting sent out. We had supply chain issues because of everything going on in 2020, right? And all of these things kind of exacerbated the inflation that we got. But with that said, there's still a lot of risk to quantitative easing in terms of inflation, much more than just a basic federal funds cut. And so, yeah. Yeah, I take trades. I've taken a bunch this morning. I'm not going to take trades constantly, you know. We're just getting kind of chop after this breakdown here, so I'm waiting. I usually trade more so after the opening bell, but yeah, we're definitely going to take trades today. Okay, Jessica Rabbit. You're probably some 50-year-old named Steve. Let's just be honest here. There's no jobs? Yeah, I mean, the jobs are definitely looking weak. Is there a cap on no tax on tips? I don't know. I don't give enough tips anyway for it to really mean anything. Nobody's tipping me anything, bro. You know? I'm the top 3 least tipped person in the world right now. Yeah, I'm not gonna get catfished over here, bro. My daughter and I, we watch Catfish regularly, you know? And I feel like it's good for her to watch it, because that way if some teen hits her up and he's like, hey, you know, I tell her, I was like, if they try to get you to meet somewhere, don't do it. You don't freaking know them. Make sure they FaceTime you. If they tell you that their camera's broken, run away. Run away. Even now, even if their camera works, it's still risky. So I don't believe anybody on the internet, because it's the internet. Yeah, the big labor report releases 8:30 Eastern Standard Time tomorrow. Yeah, 100%. Right, no, real-time catfishing. Yeah, 100%, man. It's risky. And I think in finance, it gets even worse because, again, I've told this story, but I think it's an important story for people at home to understand. If some investment professional tries to send you to WhatsApp, run away, bro. Run away. They might even put a picture of like a pretty girl up there, and they might even like flirt with you a little bit to kind of trick you. And you're going to think you got a new girlfriend, you got 300K in profit just sitting there in their account, you know, and then they'll hit you with, in order to withdraw your 300K, you got to pay 20K in taxes, guys. You know what I mean? And then they'll hit you with that. And they're just milking money. You'll never see any of that money again. They're going to lie to you and act like you're up big so you'll think you got some money, you know. I saw an episode of Catfish where a guy literally got tricked by that. Like, they put a pretty girl up. The pretty girl, who, you know, who knows who it really was, flirted with him. He got his head big thinking he was, you know, Mr. Player. And they milked so much money from this guy. So much money. So just be careful. No investment professional is going to send you to Telegram or WhatsApp. Genuinely. No investment professional is going to do it. Don't be dumb. Run away from those things. No, I'm actually speaking, there's an episode of Catfish. There's a YouTube channel called Catfish. There's an episode, there's two of them. One lady gets got by fake Johnny Depp because Johnny Depp was struggling so much he needed her to send him $100 Walmart gift cards, apparently. And then the other one was a financial scam, unfortunately, where what I just said happened, right? There's a couple of them. They're fun watch, but I end up feeling bad for the people. All right, guys. Nasdaq choppy. We're rejecting off of 490. Bitcoin at 111. Nvidia at 170. Gold is up, elevated over the last few days, but it's down a little bit. Gold broke all-time highs multiple times yesterday. Got up to 36.40 in gold futures. It's at 36.08 right now. We're trying to get over 490. I could short. I'm gonna wait a second. Yeah, I'll see it on like Facebook or Instagram where people will post a job and it's the most unrealistic freaking job ever. It's like, yeah, bro, you could work remote. We're paying $36 an hour remote from your home, you know? This is Kellogg's hiring, apparently. Paying $36 an hour working remote, you know? 20K bonus. And they'll post it like they're looking to hire somebody. And people are so desperate for a job that they believe it. Most of the time what they're gonna do is they're gonna either try to fish for your data or they're gonna try to ask you for some type of like, you gotta pay for your background check, and it's like $300. And people are so excited they got this crazy good job that they're just sending these scammers money. And then you just never hear from them again, is usually what happens. All right, let me end this poll. We're gonna do another poll. Remember, we got ISM services day later at 10. With weak jobs data out, are you bullish or bearish for the opening bell today? Again, with weak jobs data out, are you bullish or bearish for the opening bell? That's what the poll is going to be. Vote on the poll. It is live, right? Hold on. Now, vote on the poll. Let me know if you're bull or bear for the opening bell. Yeah, I mean, look, get out of here. John, don't be freaked out, but you were in a dream of mine. You were talking about jujitsu and computers. Two of my favorite things, you know. Yeah, get out of here, bro. Like, just weird, you know. Bull run in the sense that it supports rate cuts. Yeah, I mean, if you want rate cuts and the market wants rate cuts, the data that we got earlier today is certainly going to be more telling in terms of rate cuts. Like, we got weaker labor numbers, which means that it's higher likely that we're going to cut rates. Yields are down a little bit. And what is going on with the chat today, man? No, not you, bro. Not you, Tony. I didn't say it's weird. I can't talk about anybody's dreams. I've got the weirdest dreams. Yeah, the probability for rate cuts are up substantially over the last 3 days. They're up to 98%, 97%, whatever they are right now. I should have shorted this 490 level. I was looking at it. Gold now coming down too. Nvidia falling. Bitcoin still down. But Now it's like 97.6. I'm going to round up in that situation. Nasdaq's so choppy right now. People are like, hey, why don't you trade? It's because this is the last 35 minutes right here. How do I trade this? What do you guys think I should do with this, guys? Long or short? Gold's fallen down though, but it's still elevated. Yeah, I'm not trading this right here. It looks slightly bearish, to be honest. But it's not really, it's still in that range. I don't really want to mess with it. Too big of a chance it bounces right here. So. Yeah, it looks short. Honestly, the market's not really reacting well to the labor data that we got today. Yeah, I mean, it looks weak. I'm not gonna long it. It's too weak looking. Nvidia looks like it's gonna go red on the day. This previous closing price right here at 170.60 is the red to green level. Does this song have an actual harp in it? Gold at 36. Nvidia now slightly red on the day, technically red. Citigroup hands BlackRock 80 billion of assets in a wealth deal, according to Bloomberg. We also had Verizon reporting 58% of its customer base is on the My Plan offering. The firm noted earlier pricing actions in the year in Q3 provided a tailwind to service revenue. Again, we got services data today in less than an hour now. Again, all the labor data we've seen has been weak. Tomorrow is going to be the final look at it. But again, the BLS data hasn't been the most accurate report either. Especially after, you know, again, they revised May and June down almost 260,000. And so it hasn't been the most accurate thing. It really hasn't. Jobs pretty much as expected, so this will probably go green. Where were jobs as expected today? Because the ADP data was 20,000 less than expected, roughly 10,000 less than expected. You know, jobless claims were were much higher than expected, 237. That was a big difference. And so, I don't know. The labor data looked bad to me, personally. It didn't really move stuff that much. But and the market react negatively to all this stuff. Market's down. You know, again, if you want to see a look at how the NASDAQ reacted here, ADP non-farm employment change data came out here. We dropped. Jobless claims data came out, where is it? Here. And we're dropping. And so markets mostly reacted negatively to this labor data. Yeah, I mean, it's good for rate cuts if you want rate cuts, but the odds of rate cuts are already in there. Like, we already got a 90-something% chance of rate cuts. And so I think it's going to have less influence, although tomorrow's is relevant. Yeah, the scammers try to get me. I like, dude, if I get a message for a job opening for anything, I just immediately block it, you know. Like, you can tell there's just some people, like, maybe I've dealt with them or worked with them or, you know, whatever in the past, where they just really don't have much else going on and they're just kind of struggling, you know. All right, so yeah, spot Bitcoin ETF bought 300 million Bitcoin. Powell creating calls by the day, according to Polt. Said that about 7 minutes ago. All right, so in terms of Nvidia here, and Nvidia is technically red on the day now. JP Morgan reiterated an overweight and 215 price target on Nvidia after meeting with IR. Demand still exceeds supply, keeping lead times, quote, in quarters, not months. Even as Blackwell Ultra ramps, Nvidia confirmed its Vera Rubin platform remains on schedule for the second half of next year, with all 6 chips already tapped out at Taiwan Semiconductors. Bank of America sees a FOMC split at the September meeting. They expect sharp divisions within the Fed in September. Doves like Waller, Bowman, Daly, and likely Moran could push for deeper cuts. Hawks, including Hammock, Bostic, Musalem, and Schmid, stress inflation risks. Even with the 25 basis point cuts, dissents in both directions are possible. Yeah, September 17th is when the next rate decision is going to be. We got 20 minutes into the opening bell. Gold's, look at gold drop. Gold now under 3,600s. Gold falling. Again, guys, give me a follow at x.com at beginner trades. We post all this data here live. Give me a follow. We appreciate it. I'll put the link up. Hold on. What about silver? Gold bouncing back up, though. We're pretty flat. I think the market's just cautious right now, is what I would describe it as. Yeah, gold. These are gold futures at 3,600. The actual spot gold is going to be a little bit less, for sure. All right, guys, 20 minutes into the bell. Looking at our poll numbers, we did a poll. 55% are bullish, 45% are bearish. All right, we're at 475 here. All right, we're starting to come down. We're at 470s. Look at the rejection at 475. Maybe I should have shorted that too. Look at this drop. Another big drop coming through. Yeah, silver's been having a pretty good year, right? Silver at 41. Red on the day, though. Still pretty good year, though. If you look at like a 4-hour chart, it's very good. Yeah, it's at 41.50 now. It's very good. Silver's pumped. Sorry, I still have top chat on. I don't have live chat on. Do you think silver will continue running? I'm not sure. Depends on a lot of different stuff going on in terms of like economics. Again, silver and gold are really on a huge bull run, and they have been, you know. So I'd rather buy them when they're pulling back and like kind of dollar cost average over a longer period of time. But yeah, the dollar index at 98.34, 98.34. So it's still elevated today, it looks like. Maybe the market liked rate cut odds with the Dixie. All right, still falling down here. Let's watch 460s. Remember, we do have ISM services today too. That's a big report day. All right, we did a poll of bull or bear. We're pretty split down the middle after hundreds of votes. 53% say bull, 47% say bear. If I get a larger bounce up, I'd short this, guys, but it's too low towards the bottom. And so again, I'm kind of waiting for the opening bell. I've taken some trades today. I'm actually net green trading, but I don't really like the price action that we've gotten lately. My name is John. John. What do you think would happen if they don't cut or worse, surprise us with a hike? I don't think there's any chance they surprise us with a rate hike on the 17th. I think there's virtually 0% chance. It's never completely zero. There's always a tiny chance, but it's pretty freaking unlikely. If they don't cut next month, it depends on what happens preceding the rate decision. So it depends on what happens. If we get really weak data, really weak labor report tomorrow, low inflation data next week for CPI and PPI, a really bad revision, benchmark revision on Tuesday next week, and then they don't cut in 2 weeks, I think that's going to make the market freak out. I think the market's going to drop. But I think it's somewhat ambiguous what's going to happen depending on the data as of now. Like, we got to wait for the data to come in. Yeah, we got to wait for the data to come in. I don't know if the market would crash. I think the market would panic maybe a little bit. It depends. It depends. A lot of it depends. If we didn't cut, but we ended quantitative tightening, that would be a little bit more balanced. Probably get a little bit less of a reaction there. But if we kept QT as well as didn't cut, you know. Yeah, we've had surprises. I mean, surprises happen. It's just not very... Again, you got to look at... Like, what this is the bond market pricing it in. You can look at yields too. But this is the market pricing it in. Right? And so, generally speaking, the cumulative amount of, like, bets here on the rate cut odds means that rate cuts are pretty likely. But you never know. And again, you can look at yields too. The 10-year yield is what most people look at. Yield's currently at 1.18%. And so yields are down on this data. They've been dropping from this data here. They're not dropping a lot though. Again, the data came out basically back here. And so we're down a little bit in yields. Lower interest rate sentiment. Yields and interest rates follow each other. If yields decrease, that means interest rate sentiment is down. People think we're going to have lower rates. If yields increase, that's usually like high inflation might make yields spike because it means we're less likely to cut rates. But yeah, or like strong labor data. And so, but yeah, yields are down on this report, showing a lower interest rate sentiment. Yeah, it's all good. I mean, it could bat. I don't know for sure. Could tomorrow's data spike the crypto markets? It could. If crypto wants easing, and the data tomorrow shows strength, it might drop crypto. It could drop crypto. I don't know though for sure. I mean, if we get a cut, do you think we'll crash too? I don't think we'll crash. We could. I mean, anything could happen. A lot of the moves are happening now versus when the actual decisions come out. And so the market's getting baked into a cut expectation now. And so who knows? All right, guys, 10 minutes left at the opening bell. Let's see if 475 rejects, although the range is tight. Not really much to do here. AMD sees its earnings benefiting from new products. They released 6 semiconductor equipment products. Where's crude at right now? Crude is down. It was at 65s earlier in the week. Yeah, it was down. Maybe stability overseas is helping this, but we'll see. I think they did an OPEC update too a couple days ago. Nvidia at 170. So Nvidia has honestly been really weak here. If you take a look at it, it's at 185s on the 28th. It's now at 170s. Very big drops for Nvidia and microchips. Maybe some necessary corrections there. A lot of people were saying it was inflated and that we were on the cusp of a bubble in AI and tech. So maybe Nvidia going down is good. Pullbacks are healthy. Nobody likes them when they happen, but they're healthy most of the time. NASDAQ is stepping up scrutiny of companies loading up on crypto, according to the information. And so that's MicroStrategy, a bunch of other companies too. All right, remember guys, we got the ISM services report at 10. We got regular services at 9:45 today. And as a Louisianian, you know, how about that LSU game? Clemson goes down. All right, guys. So NASDAQ at 475. I'll buy the dips regardless. Yeah, since Lawrence was quarterback, Clemson. As a Joe Burrow fan, yeah. I've never rooted for the Bengals so hard ever, you know, before Burrow came on. Never thought I would root for the Bengals, but now I do. Funny. Should I get some leaps? I mean, it depends. What's the time frame of them? How long? LSU's defense looked good. You know, we'll see what Nuss brings. He's got some good numbers. He's got some good numbers. As an LSU fan, I'm glad we didn't have to play Ohio State in the championship. You know, I'd rather have played Clemson. All right, guys. So again, we're at 470s here. We're not doing anything. Opening bells in 7 minutes. 7 minutes. I am using Top Step's funded account program on the left, and then the right's Toss. Top Step, they give you a 50K demo. They test your skill with it. Base one starts at $50 a month. They give you a 50K demo. If you can make 3K in profit on the demo without losing 2K first, following their rules and conditions, they fund you 50K, 90% split. You get to keep your first 10K prior to that split kicking in as well. And so that's similar to funding your own account. If you fail, you lose $50. It's not the end of the world. It's a better way to learn how to day trade, in my opinion. Because most day traders are going to lose, including on Top Step. But frankly, it's a lot cheaper to lose on Top Step than it is to fund your own account 5 or 10,000 and destroy that account like most new traders end up doing. And so what you see is some people hate on this, but like it's incredibly useful. It limits your risk. Your risk is $50 a month for the base one. And yeah, there's an activation fee if you do pass the test. But most day traders lose money regardless of where they go. And so again, if you want to check it out, they did their back to funding feature yesterday. They did announce their back to funding feature yesterday, which is really nice. Again, you can kind of see it here. $4.99 to reactivate a 50K lost XFA. And so if you lose your XFA, you can restart it. Not too bad. I'm probably going to use this sometimes, I'm sure. Again, if you want to check them out, great way to help support the channel. They're a sponsor of mine. I'm biased. I get paid by them. Top 3 most biased ever. Don't copy me. Not an investment professional. I'm biased. I get paid by them. But genuinely useful in my opinion. Most day traders lose money, and I've seen this firsthand and secondhand. Most day traders lose. Everybody thinks that, again, I thought I was going to be like a guru savant day trader. I ate all that marketing up in the beginning. I thought I was going to be a millionaire student, guys. Just genius. And the problem with marketing like that is traders refuse to accept losses. And they end up just losing, you know. I don't know. I want LSU to win. I hope they do win. All right, look at this bounce at 460. I was thinking about buying it, but again, we're just too choppy ahead of the opening bell. Look at that bounce. Literally exactly on my level here. Look at this. Again, if you want to check out Top Step, links pinned at the top of the chat. Look at that bounce right at 462. Again, this too sideways. This price action is not favorable. I got to wait for the bell here, guys. That is not good enough for me here. No, Top Step's 90%. This is only for adults, by the way. I burned around 15K before getting a feeling for it. Right, I lost thousands. I lost like $4,000. I had $4,000 saved up. I saw the movie The Big Short. I came home, and this was 10 years ago. I came home. It was like, you know what? I'm gonna be rich. Let me trade. Deposited 4K. Carol at the time was like, don't freaking do it, John. You know, that's all our money, or that's all your money right now. Like, don't do it. I did it. Lost it all within like 2 weeks trying to day trade penny stocks, I'm pretty sure. Almost cried. Probably would have cried if Carol wasn't there. You know, 4,000 was a lot of money for me at the time. It ended up working out because I ended up starting this YouTube channel. And I just kind of made fun of myself. And now here we are, you know. And so the net effect has been very positive. But don't be like me and lose your entire bankroll in 2 weeks because you want to look cool in markets. It doesn't make any sense to. I didn't cry. I wanted to, though. You know? Yeah, I don't even tell people I'm a good trader. I don't sell a course. I don't sell a service myself. I have one sponsor. I tell people I'm biased in their favor. I mean, people can say whatever they want. Usually they're just mad I'm growing, and they're not, you know? Usually they're just mad. And thus is life. Honestly, the haters are actually good for you, you know? You want to prove the haters wrong, so you end up doing more and more and more. And again, I've said it once, I'll say it again. You can hate. It's going to burn, though, because you're going to watch me keep getting larger and larger and larger and larger, and, you know, that's not going to feel good for them. And so, listen, I wish them the best. I'll hate them forever, but I wish them the best. How did you learn? I scaled down my size and started trading demo accounts in very small size. That's the only way. People try to go too big too fast. They think they're going to be rich, right? And so they put in 20 grand so they can try to flash big gains on Twitter or whatever, social media. And then they just end up losing a lot of it. And so the only way to really learn is to kind of scale down your size and slowly take larger size. All right, guys, here we go. We got 1 minute left. All right, we're at 481s. All right, here, 45 seconds. Again, we got regular services PMI at 945, and then ISM services at 10. Yeah, micros and futures are the way, I think. It's subjective, but I like micros. All right, NASDAQ bouncing back right at the opening bell. We got about 15 seconds. Hit the live button next to the play button. You'll be caught up on stream. Yeah, like my channel mostly covers economics anyway. Like we cover economic data. That's why people tune in to me. All right, there's the bell. Let's see if we get some volatility picked up here. Giorgio Armani has passed away. Rest in peace. All right, look at the NASDAQ fall here. NASDAQ dropping at the opening bell. We're at 459s, 458s. Big retracement back up though. Hold on, let's see. Let's watch Nvidia here. Yeah, look at the retracement on Nvidia. Correlates with the retracement on the NASDAQ. Apple going up a little bit prior to the opening bell. It's at 430s. Now getting some red, but again, Nvidia pushing up a little bit. It's down. All right, guys, let's watch 23 fives. 23 fives. I can't do that one. That one's a little bit too jolly for me. That song that just played. Like, I go to different artists. Some of their songs are good. Like, the last one before that was nice. I liked it. That last one was too jolly. I feel like being Zoolander. Anyways. Nvidia's up to 171.40s. I don't know if this one's much better, but I'll let this one slide. All right, we're up to 23 fives. Yeah, Meta's been up all morning. I saw some news earlier that Meta is talking to the president's wife this morning or something like that, or this evening in some type of event. Maybe that's why Meta's up. I don't know. Some type of AI pitch is what I heard. I don't know though for sure. Honestly, my swing trades are usually better than my day trades anyway. All right, we're at 23.5 again. Nvidia's up. Apple's down. United Health dropping. I'm in some stuff here. Hold on. Yeah, I'm green on the day. You think we should sell gold and buy Rivian? I don't think y'all should do anything. I'm not going to tell you guys what to do. I don't know what y'all should do. All right, so we're finally up to 515s, 514s. 525s, now probably a relevant spot. Bro, I love my wife. But still, worst timing ever. It's the opening bell. All right, look, there's 525s to reject here. I might buy a pullback. Let's try it. We'll maybe add down to 504s here. There we go. All right, we took half off. Took some more off up there. Look at that. And we'll get out the rest right there. Nice little run. It's too close to the opening bell for me to take long-term positions, but we went up so quickly that I got to take profit here. We got up to 525. I took the rest off. Quick little scalp here at the open, but well, this looks strong. I bought the pullback after the big run up at the open. There's 535s here, which is this top. And we're just not even stopping here. 550s right here. Maybe we'll watch that. Nvidia's bouncing back. Apple's bouncing back. I'm not really feeling this artist though. Look at the strength at the opening bell, guys. Nvidia moving up. Again, remember, we got ISM services data here. $9.45. Okay, we got services data at all right, we got a dip. We rejected right around 550, which is what one of the levels we were looking at. So we got jobless claims out. Next one is services PMI, and it drops at 945. Look at this big dip. We got the 200 exponential close to where we're at now. Right around here. Looks like a reasonable pullback zone, but the market's starting to turn quickly too, so I think I'm just gonna wait. We're pretty green on the day. I gotta wait for the good edge. If we're gonna bounce, we could bounce around this 490. Doesn't look like we're gonna bounce though. So a good thing I'm gonna wait. Gold's still pushing up too. Microsoft up, but pulling back with everything else. Yeah, my hands are off here. Looking more like a short now. Let's see if we reject this area here too. 492s. 490s, maybe. Yep. Rejection. See where we go here. Kind of whipping back and forth. I think it wants to go down, but you never really know here. We're popping right back up. Have a choppy day here. Red showing up now. Yeah, Nvidia's still falling down. Yeah, we're green in 2 or 3 out of our accounts this morning. What did we buy yesterday? We bought Marvel. Oh, it's more Christmas music. Marvel's back up today too, which is good. Still down on the position net, but yeah, I mean, this is I can't get rid of the Christmas music. I try. Everywhere I go, it follows me. All right, guys. In 3.5 minutes, we get what's called the S&P Global Services PMI data. Or actually, wait. Yeah, in 4 minutes, we get the S&P Global Composite PMI for August. It's expected at 55.4. Services is expected at 55.4. So both of these are expected at 55.4. And then the big one is ISM ISM Services PMI at 10 a.m. Expected at 50.9, 51 basically. Last time was 50. With PMI data, over 50 means expansion in those sectors. Below 50 means contraction in those sectors. Look at the red showing up though. All right, so the president made it clear that he may have contact with the Russian president soon, according to White House sources. Okay, so here's something that might be negatively impacting the markets. This actually dropped like 30 minutes ago, but China's MIIT and market regulator on Thursday pledged to accelerate the enhancement of supply capabilities for next-gen equipment, promote technological breakthroughs in key 5 and 6G components, chips, and modules, and ramp up 6G tech research and innovation. Very volatile market though. Up and down big. Appreciate all the love, man. We got a bunch of subscribers today, too. All right, so we're rebounding back up. Look at 490 reject. Apple's starting to push. Nvidia's at 170. It's trying to hold that ground here. We got about 1 minute left. Yeah, we'll see if PMI influences things, but we're gonna cover it like we always do. All right, Apple bouncing back. Look, Apple trying to go green on the day as of now. Very big range, but sideways movement here. All right, so look at this bounce back. Watch 5 and 504 here. Nvidia's right at the previous closing price too. It looks like it doesn't stop it. Look at the NASDAQ push. Okay, so I'm sorry. The regular labor report did come out, and it showed up at hold on, let me look. This is not the big one, guys. This is like the least important one. This one showed up at actually, I don't see it. Okay, global composite showed up at 54.6. So a little bit weaker than expected for global composite data. I'll put this up in chat. Again, this is the small one. Services came in at 54.6. S&P Global Services came in at 54.6 versus 55.4. So there it is in chat right now. A little bit weaker than expected. Not too weak, but honestly, another weaker than expected labor look in services. I'll put it up on screen, but the big one's going to be at 10 o'clock in 45 minutes and 15 minutes. All right, so it's now scrolling at the bottom of the screen. Didn't really have much of an influence. Again, the big one's going to be at 10 a.m. Apple's pushing up though, and this is what's driving the NASDAQ back up. We're very flat range. Gold's moving down. Market wants weak outlook for rate cuts. Yeah, but if that was the case, wouldn't the market have reacted negatively to jobless claims and the ADP data that came out earlier this morning? I don't know, man. Again, 55.4 was what came out for essentially both of them. Let's see what the 10 a.m. release shows. Yeah, at a certain point, recession fears do come into play. That's true. Look at Apple, guys. Apple's surging up. Apple's got their event on the 9th on Tuesday next week is what's going on. Yeah, but Apple's driving this. Nvidia's up too, but Apple's really pushing. Man, my HIMS position is doing so well, dude. I'm going to take a little bit more off of HIMS. Again, our average price in HIMS right now is 41. Almost 41 even. Alright, we took a little bit off. Look at this big red candle showing up in markets chat. Wow. Yeah, Bitcoin down to 110s. It's falling down this morning. Look at this bounce at 460. 460 is a level here. I kind of want to short now, I guess. Oh, dude. Tap 460s. All right, we just rejected alpha 490. We're so choppy here, though, guys. We got ISM services in like 10 minutes. The market's struggling to hold, though, man. Again, Apple's been very strong, but let's see what happens here. We had a big red candle that we didn't really hold, and now we're kind of trending. There's 23 fives again. Let's watch 23 fives. Nine minutes. Tap 23 fives again. Okay, this is Apple still pushing up here, if you look at it. Apple's still driving the market higher here. Wow. Such a weird choppy day, though, so y'all just be careful here. Eight minutes. Look at this drop. Wow. We're just whippy right now, though, guys. So y'all just be careful. We're incredibly whippy right now. We're just kind of going up and down in like a big range. Seven minutes. I don't know how much the ISM data is going to really move things though. How weak the market showed just now. It popped right back up. Starting to break down here. Apple finally contracting. Let's see what Nvidia does. Again, 6 minutes left. 6 minutes. We do have, it looks like we want to be weak, but it's hard to gauge where we're going here. We're just kind of choppy. All right, guys. Hey, services PMI coming out very soon. Right at the lows again at 460. We bounced off of 460 over and over and over again, like 3 or 4 times. Eventually, I think it has to break down, but we'll see if it happens this time or not. Another huge bounce. There's like a wall of buyers at 460. Like a huge wall of buyers at 460. It's hit it like over and over and over again. Just more Christmas breezy, bro. I swear I cannot get away from Christmas music for some reason, dude. Like every time we hit 460, we just bounce. Again, guys, we got 3 minutes left. 3 minutes. Three minutes. Nvidia has been mostly downtrending all day. It depends on what you think the market wants. Okay, so the data is expected for ISM services at 50.9. 50.9. So 50.9 for ISM services is what's expected. It drops in about 2 minutes here. 2 minutes. And we'll see how the market responds to this. Give me your last minute predictions. We had an ad this morning. I don't know if we still got one. We get a minute and a half. Minute and a half. Again, Apple's kind of propping up the market right now. Is what's going on. This is kind of what's been driving it. All right, guys, we got 1 minute left. 1 minute left. The volatility might pick up ahead of this report. Expected at 50.9. 50.9. Drops in 1 minute. All right, guys, 45 seconds. Hit the live button next to the play button. We got 30 seconds left. $50.9 expected. All right, guys, here we go. 8 seconds. 8 seconds. 50.9 versus 50.1. And 52 is what it showed up at. 52 is what it showed up at. 52 versus 50.9 expected. Stronger than expected here. Guys, stronger than expected. So far, the market has reacted kind of ambiguously here. 52 versus 59. 50.9 expected. Again, guys, previous of what did it show up previously at? Previously showed up at 50.1. That's what the data showed up as. Nasdaq tested that same 40.6 level again, dude. There's a wall of buyers here. Let's see if we keep flushing down. Man, kind of wild movement here. Are we going to crack this low here? Again, 52 versus 52.9 expected, or 50.9 expected. Stronger than expected services sector. Stronger. All right, now we're starting to react positively to this report. See what happens here. Are we finally going to break 460 on this chart? Because we've tested 460 over and over and over again here. Kind of expecting us to here, but I don't know, man. The market is honestly ripped up every time we tap 460s. And it makes me kind of nervous too at this point in time. All right, so we just actually caught that short a little bit here in our funded account on our other one. We finally broke 460s here, chat. Finally broke 460s. I don't think the services data is enough to influence it. Tomorrow's report is going to be the single most important report. And again, I'll put this data up on screen, but this data did make the market fall down a little bit. Let's see if it holds. Tomorrow we have the NFP payrolls report, the first report since the really bad 258,000 revision. The NASDAQ finally broke under 460. It's starting to fall here. And it looks weak, but who knows, man, what we're going to get today, dude. Honestly, really, who knows? Look at this breakdown here. Watch 425s, 426s is what I'm looking at. Let's see. All right, guys. Any bet on what we get tomorrow? That's what I'm curious about. Any bet on what we get tomorrow? Any bet? Let me hear your last minute predictions here, chat. I'm curious. The negative response, I think, is because it's going to bring yields up a little bit, maybe, but probably bringing yields up. Yeah, it's brought yields a little bit higher, and so the market doesn't like that. Essentially, it means lower. It means stronger economy data. So it less, but the data's kind of back and forth. Like weak labor data made the market react negatively. Now we got strong services sector data making the market react negatively here. So either way, I don't know if the market's really like moving much with this. Stronger dollar, yeah. I mean, Bitcoin's falling as well because Bitcoin wants easing. Here's that 425 level we talked about, and here we're starting to bounce. Again, guys, I'm gonna go ahead and shut it down for the day. Appreciate all the love, man. We got a lot of views today. I appreciate it, guys. Thanks so much. If you haven't already, again, check out TopStep. They recently did their back to funding option, so even if you lose one of your XFA, as long as you fit within their parameters, you can reactivate it for a fee. But I think that's a great option. Allows people to go straight to funded, basically. If you lose one, straight back to funded if you lose one. I think that's a great option. We're green on 2 or 3 of our accounts today. We are also green. Actually, we're now red in stocks specifically, which is fine. You know, we're green net, of course, in stocks over this year and last year in terms of swing trading and investing. But we'll see what happens. We'll see what happens. Markets are dipping down a little bit into tomorrow's labor report. Tomorrow's labor report is absolutely massive here, chat. Absolutely massive. Again, check out TopStep. Great way to help support the channel. No PDT run futures. Beautiful way to learn. 8:30 Eastern Standard Time tomorrow, guys. We will be live 8:30. Don't miss it. As soon as we end this stream, it's going to bring you. And again, remember, TopStep's a sponsor of mine. I'm biased. I get paid by them. Understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade smart. I can't guarantee anything. I don't even claim to be a good trader. I don't sell anything myself. Don't sell a course. Don't even claim to be a good trader. We just cover economics and trading for you guys. You're welcome. You're welcome. But as soon as we end the stream, it's going to immediately bring you to tomorrow's stream. And again, if you really love me, you'll wait entire 24 hours at your computer until tomorrow. If you don't, I'm judging you. That's all I'm saying. All right, guys.